Barlow from InvestorStream, let's delve more deeply into Australia's infrastructure boom. According to Deloitte's Access Economics, prior to the onset of the global pandemic, an infrastructure boom was already underway in Australia. The increase in government spending on infrastructure as a means to re-stimulate post-COVID economies has now ensured that this boom will continue to grow over at least the next decade and a half. The 2021-2022 federal budget has a $110 billion 10-year rolling infrastructure pipeline that is designed to support jobs, drive economic growth and help rebuild the Australian economy after COVID-19. Further supporting the boom is the need for infrastructure spending that supports the transition from coal to renewables and helps to build more resilient supply chains as countries continue to evaluate the security and reliability of their channels. The significant growth in the sector cannot be serviced by government alone. Ensuring public-private partnerships and private sector investment will benefit from continued stimulus in infrastructure spending. This will provide prudent investors with major opportunities in the sector. Unlike commodity markets and the more generic benefits that can be gained by investing in companies exposed to certain minerals, the risk profile of infrastructure companies means that careful and selective investment is critical. In March 2022, Infrastructure Australia published Delivering Outcomes, an industry reform roadmap to address the long-term challenges facing Australia's infrastructure sector, including poor productivity, the increasing number of insolvencies, and cost overruns and delays in the delivery of major projects. When investors are looking to gain from the infrastructure boom, they will need to ensure that the companies they invest in meet a number of criteria beyond exposure to the sector. Some key factors that should be used to assess a company's performance include a long history of success and profitability, strong cash balance sheets, broad industry relationships, and strong order books. InvestorStream recently spoke to Aerison, a multidisciplined engineering design and construction company, following the release of their 2021 full-year results. Aerison has a history of over 30 years of success, providing multidisciplined engineering design, construction and asset maintenance services. Aerison is also recognised for its specialist expertise in environmental services, including emission mitigation performance studies, compliance testing and custom designed and built solutions engineered to reduce the impact of industry on the environment. Aerison has a diverse array of long-term Tier 1 customers such as Rio Tinto, Roy Hill and Newmont, as well as government contracts including the Metronet cab structures. The Metronet contract alone provides 5 years of manufacturing and maintenance opportunities. The company has an order book of $400 million with a $2.2 billion pipeline and portfolio of master service agreements across iron ore, gold, marine, minerals and government. The outlook for these sectors is strong. Aerison CEO Giuseppe Leone believes that with these market conditions, combined with strong upside potential from current live tenders and a strategy of selectively tendering for opportunities without compromising on margins, Aerison is well placed to continue its growth trajectory. With a current market cap of $66 million, Aerison provides a lucrative opportunity for prudent investors to gain secure exposure to the continued infrastructure boom.